Okay, you're welcome here, you're welcome here, you're welcome here, you're welcome here. We are live already. So you can share this live stream to your family, your friends, your neighbors, anybody you know that is interested in forex trading or may one day have interest in forex trading. Okay, so this is a free webinar. So let's share to other people to join in. We are live. Okay. I'm trying to send this across my groups, the training link across my group so that we have greater reach this evening. So just give me a few minutes to do that. And you can from your own end to do same. You can do same from your own end. Okay, sharing done. So this is I know some persons are meeting me for the first time. Some persons know me for years. Some persons this is the first time of meeting me. Okay, if this is your first time of joining my webinar, you're welcome here. And this webinar I hold it periodically, months. Um, the last time we had it was June. I was so busy last month I couldn't hold. So it's supposed to be every month, like every month. But I was so busy last month I couldn't. So this is just like what we were supposed to do last month. Okay. I am sorry for that. I hope my apology is accepted. Okay. So for those that are just joining us for the first time in our webinar, this is Sarah Bamba. That's my name. I've been a forex trader since 2020. That during the lockdown period, you know that the lockdown pushed a lot of persons to the online space. People started trading online, and apart from online trading, people started learning skills online. You get so the lockdown actually pushed a lot of persons to become digital. So digital skills became loud then so the digital skill I chose, I settled for. I learned a lot, yeah. A lot of digital skills that period. But the one I settled for was forex trading. Is forex trading, yeah, and crypto trading. Now you may want to ask me why forex. Okay, I know my reasons why I chose forex. You can use the chat box if you can hear me clearly. Please use the chat box. Let me know that I'm not talking to myself. Okay. So, why did I choose forex? I discovered a lot of amazing things about forex trading. The first is that forex trading does not require your um, those kind of stuff that you must need the next party to be able to do something. For instance, if I'm doing digital marketing, I must look for somebody that I will market his or her product for me to make money. If I'm what other skill? If I'm an affiliate marketer, I have to look for a product to market before I can make money. What other digital skill are there? If I'm a graphic designer, I have to look for somebody that needs graphic to get the skill. You understand? So forex trading is one skill that you don't need to advertise your goods and service to anybody before you start making money. You can be in your own cave. You can be in your own cave and you are still making all the money that you can make. And the forex market is so liquid and so voluminous that it has a trading volume of $7 trillion. That is the market cap of the forex market. The forex market is the highest traded market in the whole world, you see. So there are a lot of potentials in forex trading that I got to realize and say, oh, is this forex I'm going to do? So that's why I took into forex trading. I learned it very well, like I really learned. And because I took my time to learn, I've not had that kind of serious experiences whereby people lose their millions of naira, you understand, before they finally learned. Me, I started learning before I started trading. You got. So that the one mistake that a lot of persons make in forex trading is that they will start trading first. When they have lost money, that is when they'll start looking for who to learn from. But that is not how forex trading work. You should imagine opening a tailoring shop because you like tailoring, but you didn't learn how to sew, you get. So a lot of persons make that mistake of going to trade first instead of learning. Thank God I didn't make that mistake. Not that I've actually not lost. Yes, it's business. In every business there are profit and loss. I've actually encountered some losses, but then it doesn't, it my losses has never, when I say never, I mean never, my losses have never outweighed the profit that I have made, you get. So that is one benefit I have for forex trading. So please let me know if you can see my screen. I started sharing my screen because we are going straight to the class. um we are going straight to the class. So let me know no if you can see my screen very well. I'm sharing the um okay. So okay, we can hear you fine. I want to use a neutral chat. I don't have anything. Okay, you can't see it yet. Okay, let's see this. Okay, can you see my screen now? I've actually okay. If you can see, let me know, please. Let me know if you can see my screen now. Okay. I want to confirm what we are seeing on my screen so that I want to know if we're on the same page. So let me change the okay, let me see. Oh, okay, okay. Good, nice. Okay, so I was just talking about forex trading. Why I decided to go into forex. That I don't need to sell to anybody before I can make money. I can be in my own cave and I'll start making money. So that is just simple. Okay, so now first things first. A lot of persons jump into forex trading without knowing what really moves the market. A lot of persons just start trading without knowing the details about the market. So I'm going to be starting with that before I go to anything called technical analysis. Now, if you don't know these things that I'm going to be teaching first, there is no way that you will, there's no way you will be able to trade forex profitably, even though you know all the technical analysis there is. Now, every business has their own personality type. Every business have their own personality type. So forex trading, since people are different, forex trading caters for a lot of personality. Okay, so I want to just quickly rush go through this before I go to for the technical analysis. Every business has a personality type. Okay, so if you want to be successful in forex trading, the first thing you will ask yourself is, what kind of person am I? What kind of person am I? So there are some persons that are very aggressive persons. They are just kind of impatient to some extent. They are not impatient in a negative way. They just want their things to be done now and now. You understand? Some persons are like that. They are just that, they don't have that ability to be waiting for something that is moving like a snail. You get? Why others, they are not aggressive. They are just this calm type that they are willing to be patient. They are very patient people. You get? Now, I will group this kind of person as a high risk trader and a low risk trader, a high risk appetite trader and a low risk appetite trader. So let me type that. So we have the high risk. If you don't know this thing about yourself, you will not be profitable in forex trading. High risk appetite trader. That is, I want to start from here. The high risk appetite trader, and we have the low risk appetite trader. Now, defining the kind of person you are, not by, okay, deciding that, okay, I want to say that I want to be a high risk appetite trader. If this personality is not in you, you will still not be profitable in forex. It's like, your makeup. People that are high tempered are high tempered. People that are soft spoken are soft spoken. People that are easy going and they are extrovert. Get? So there's nothing that can be done with that kind of person. That is your own personality. So if you can understand the kind of person that you are as a trader, that is your first step of being profitable in the forex market. Hope I'm making sense. Please, you can drop your comments. Hope you can drop your comments in this comment section. Hope I'm making sense. So first of all, you have to define what kind of trader you are, what kind of person first before the trader, what kind of person you are. Are you this kind of person that you can easily, let's say, you can use 1 million naira to do a business, and even though the 1 million naira, like, you don't get a return from that 1 million naira, you're still cool and calm, you still keep your cool. I know it's that, but there are some persons like that. Those persons are high risk appetite guys. They can, some persons can go to travel to a country, buy goods inside container, on their road. Maybe they put the goods in the container, they come back to Nigeria. On the way, they can just like, they are relaxed. Even though the goods are worth millions of naira, they are relaxed that their container will get to Nigeria and they'll get their goods. That mentality that they have millions of money in the IC, bringing their goods for them. They will not rest. They will keep calling. They will keep, because they are low risk guys. They cannot afford to take much risks. You understand? And it's fine. It's okay. Now, when you have known this kind of person that you are you a high risk appetite person or a low risk appetite person? This will tell on the kind of pairs that you should trade. First, it tells on the kind of pairs that you trade. That's the first step. Now, for instance, let me take another textbook so that, okay, let me put this one here. Now, for the person that is a high risk, the high risk appetite guys, there's some pairs that you don't have any business with. Why? Because these pairs will so frustrate you. Not that the pairs are bad in themselves, but it's not in your DNA. Let me put it that way. It is not in your DNA to trade that kind of pairs. You will not do it if you trade that kind of pairs. So there are some pairs that will frustrate you. So as a high risk appetite trader, I'm going to be telling you the kind of pairs that you should trade. One, let me put it, the kind of pairs to trade as a high risk appetite guy. That is the first one. The second one is the kind of market that you should trade. That's the second one. The kind of pairs you should trade, the kind of markets that you should trade. So if you're a high risk appetite trader, you should trade pairs that have high volatility. You should trade pairs that have high volatility. Now, the thing is, trust me, there are some pairs that are highly volatile than others. You get those that are in the forest place to understand that. I've been here for 5 years and counting. So I know pairs that have high volatility. One of some very high. Now, this is the kind of trade you should take. Why? Because you have the risk appetite to weather the storm of good. You understand? That's the first thing. And God, as once you don't you're always in and out of trade. Let me put it that way. So for instance, if you enter a trade now, in the next 1 hour, you expect that that trade should be giving you profit. You don't have the patience to be waiting for one trade that in 1 hour is just giving you 10 pips. This is also your characteristics as an high that guy. Number one, you have the high risk appetite. You don't have the patience to be like, okay, I'll wait at this trade for today. No, you just want a situation whereby if you enter the trade now, in the next 1 2 hours, you should have been seeing your profit. Or if the trade is not going your way, you should just be there. You have been seeing your profit or your loss. You understand? Gold is a pair that you should trade. Why? Because it has high volatility. It has high volatility. Another pair that you should trade, you have GPP USD, GPP, GBP USD, you have GPP card. Why am I telling you this? Because sometimes while you are waiting for, you are seeing the trade is moving your way, but you are seeing just 10 piece profit. You are just angry. Which kind of pair is this one now? What kind of nonsense is this now? Why is this trade wasting my time? Give me money, let me, you understand? I know some persons have been there. So these are the pairs that will make you like, you get what I'm saying, that will give you good profit fast. And another thing you can trade is indices. So I don't trade indices, but indices has high volatility. Then the kind of market you should trade as an high risk appetite guy or lady, I'm a lady, let me just be, but if I'm using guy, it's in the general sense. I'm not that gender person. Okay. So as an high risk appetite guy too, the kind of trade market you should trade. Our market, the time said you can trade fundamentals. You know those NFPs and CPI. I can tell you for what I've noticed that 80% of the time, fundamentals go in line with technicals. All those times that there will be CPI news, there will be NFP, Donald Trump speech, and all of those stuff. A lot of the times, those fundamentals actually goes in line with technical analysis. So the kind of markets you should trade more are the markets that fundamentals, fundamental makes you profit quick. So you can trade fundamental because that suits your personality. We are talking about personality here. You cannot change your personality. This is who you are. But if it's a bad personality, you can change it too. But that is not a bad personality. The truth is that, let me just tell this truth for sure. In every business, whether oil and gas, solar, what is it called? Manufacturing, production, anything you want to talk. If you're not a high risk person, high risk appetite person, you will not make money in that business. That's the truth. That's the truth. You must be willing to take risks. The people that actually Every market are people that are willing to take risks. Okay, so that is that. Now let's go to the next one, which are the low appetite guys. I know why I started from this because you have to know who you are. The low risk appetite trader. Now, what kind of pairs pairs to trade? That's the first one. Then the kind of market to trade. Yes, okay. So for the low risk appetite guys, the kind of pair you should trade are pairs that have low volatility. Okay, you ought to trade pairs that have low volatility. Why? That is what suits your nature. That is what suits your person. So you trade pairs that have low volatility. I think I've written that in the wrong. Let me take it up. You trade pairs that have low volatility. Why? Because it just suits you. You are seeing your money is not coming fast, but it's coming, and you're okay. You are patient. You are saying, okay, this thing is still to make money. Fine, it's okay. If in a day they see just 10 pips, they are good, they are okay, life goes on. Okay, life goes on. If in a day they see just 20 pips, okay, it's fine. Even if it's a week, okay. So you have to trade pairs that have low volatility as a low risk appetite guy. Okay, so what are these pairs? The first pair that I will call here is card CHF. This pair has low volatility. Card, okay. AUD CHF. All these things are cheat sheets that people don't really know. They just see anything. If the low risk appetite guy we enter gold and will be shouting, hey, just not like you don't have the mind to trade that, okay? So these are the best to trade as a low risk appetite guy. Then the markets to trade are just markets that have less volatility. Sometimes this volatility you can trade like Mondays, Tuesdays, Thursdays to some extent they are slow. My boss, one of our mentors, will call Tuesday patient Tuesday because Tuesday is kind of slow. So you can trade Tuesdays, you can do Thursdays, sometimes Friday mornings too. It's fine because the markets will be resting by that time. Now we have those that are mid appetite trader. They are just there, neither hot nor cold. Okay, so I'll just run this through. We have other things to trade. Euro USD, NZDJPY, AUDJPY. You can trade AUD cards, GBP cards. Okay, those kind of pairs. Please, it's called the names of pair with. Please, I think Dolapo, please rephrase your question there because I can't really get it. When I see it again, I'll reply. Just rephrase it. I don't understand what you're saying. Okay, so those are the low risk appetite, the mid risk appetite guys. They are just there. Okay, so if you are that kind of trader, you don't have any business with gold. Sometimes you can trade GBP USD, but majorly pairs that have mid risks, NZDJPY, NZDUSD, AUDJPY, low volatility. Okay, that sorry, mid volatility. Okay, so that'll be all for now for as regarding personality types and trading, knowing the kind of person that you are so that you'll not be making wrong decisions. A lot of persons will fall victim to social media frenzy. You get, so you see this person on social media posting posting trades like the person took gold, the person took gold and traded and took like 10 positions on gold. And okay, low risk appetite. Okay, it's on the screen. For low risk appetite, guys, I say you can trade CAD CHF, AUD CHF, AUD NZD. Those pairs have low risk. Those are the pairs that are good for a low risk, guys. Let me just go through my watch list and see other ones. Mm, okay, those are the guys. I was correct. What I called was correct. Where was I? Where was I typing from? Okay, okay. So I've called CAD CHF, AUDNZD, AUDCHF. These pairs have very low volatility. So you can go take them, go and do your thing and come back. The pair will be moving slowly, but it just suits your nature. You get. Now I was saying that a lot of persons fall victim. A lot of persons fall victim to this thing called social media frenzy. So you see a forex influencer taking gold, and in that gold trade, the person took up to 10 positions. You don't know the kind of capital that person has. You just follow, you go and do the same thing. And when you see red, you start shivering. That is not how you trade. So you know yourself first in order for you to become a profitable trader. Remember, we are talking about the profitable traders toolkit. The profitable traders toolkit. And this is the first toolkit that I've given you. This is the first tool in my kit. Okay, this is the first tool in my kit. So the first tool in my kit is to know your person, know who you are. Okay. Now the next thing, you know what you are trading. You know what you are trading. Now, when we talk about knowing what you are trading, this now has to do with technicals. What am I trading? Am I trading ICT, SMC, chart patterns, candlestick pattern, BTMM? There are so many. But the confusion that most traders make is that when they come into the market, they just go around, especially YouTube, here that we are. You see this person talking about one strategy, you go and trade it. You come again, see another person talking about one strategy, you go and trade it. You will just mess yourself up. You get. So you want to know what you are trading. And when we talk about what we are trading, know what strategy, specific, what strategy that you are trading. One of my mentors that I bought a course from, actually bought courses from different persons before I finally fine-tuned myself. Okay, so one of my mentors I bought a course from just mentioned one strategy today in a status. I just looked at it and left it because I know that that thing is not for me. I don't want to scatter myself. Let me just say the truth. I have complete course on ICT, like full 1 year course on ICT. You know how ICT teaches. I have complete course on SMC. You know how SMC is. When I started trading, actually, I started with indicators, moving average 50, moving average 800, moving average 200, and the likes. And I've settled for what works for me. So, as a forex trader, one thing you should put in your toolkit is to know what works for you. It is very important. You cannot undermine that. Know what you are trading. Now, I want to start with, okay, I found out that candlestick patterns and chart patterns have made me so profitable. You understand? Candlestick patterns and chart patterns have made me very profitable in the forex market. And even though later on I learned SMC, I still really don't trade SMC that much. You get, I don't trade it that much because what's the point of switching where you know what has been working for you? Not that essence, no strategy is bad. Let me put it that way. There's no strategy in this life that is bad. In forex trading, there's no strategy that is bad. Just pick one, master it over time, and you become very, very successful in the forex market. Now, what I'm about to teach you is a strategy that one of my students um in my paid course, he actually used this strategy, and he said that it made him money. I actually taught the strategy, but he said that is the only strategy it takes. As of last year, he joined us last year May. Yes, he joined us last year May, and he just it was in final year then when he joined us, and this strategy had given him a lot of money. I was the one that taught him, so I will be teaching you people also for free, not at a price. He paid for it, but I'm teaching it for free. Yeah. Okay, so it's one of the candlestick patterns. What I want to teach now is one of the candlestick patterns, and it is called the star pattern. I don't want to be calling. I believe that we got this, so let me just take them out. I believe we got this stuff I did here. Okay, so this pattern I'm talking about is a chart pattern called the star pattern. So this is what I'll be teaching you. Star pattern. It's called the star pattern. So it is made up of three candlesticks together. It's made up of three candlesticks together. So I have the first candle. Sorry, I'm not that good in drawing, so you people will just pardon me. Thank you. Thank you in advance. Okay. Uh, mm, what am I going to use to draw? I want to use something else to draw, because if I take out this brush and start drawing, you people will start laughing at me now. Okay. Let's see. Let's see. Let's see. There's no other thing I can use to draw here. Wow. Okay. Let me draw with the brush. Oh. Okay, so I have this. I have my first candle. Okay, I started. Okay, this will be my first candle. Hey, it's well low. Okay. Okay, this will be my first candle. This is star pattern. I say it's made up of three candlesticks that are formed together. So if you see two candlesticks, it's not the pattern that I'm talking about. If you see one candlestick, it's not the pattern. And there are conditions which I'm going to be listing for you guys. Okay, so this is the first candle. We have a second candle. And we have a third candle. This is what the star pattern looks like. When we go to the chart, I will be explaining more. I'll be showing you examples in the chat. So let's have this like this. Okay, I think this is better than the first. Clap for me, clap for me, clap for me, clap for me, clap for me. Okay, so let's just continue. So sorry. Okay, so this is the three candlestick pattern. Now, the first one, it is either bullish or bearish. That's what you should know. It's every pattern has a bullish or a bearish pattern. Why? Because all the patterns, the market is either bullish or bearish. The market is either bullish or bearish. So all the patterns that you can see in all the strategies have bullish strategy and the bearish strategy. Okay, so let's continue. Now this pattern now, like I said before, it's three candlestick patterns together. Now, if it is a bullish star pattern, for a bullish star pattern, let me write it here. For a bullish star pattern, these conditions must be met before you can count it as being valid. These conditions must be met before you can count it that it is valid. So what are the conditions? Number one, Number one, the first candlestick pattern. When I say the first candlestick pattern, that means this one that you are seeing here, this candlestick that is here, this one, I believe we're all seeing it here, must be a bearish candle. That means must be a bearish candle. That is to say, if your candle, if your chart is like mine, let me expand my chart so that I will explain this for you properly. If your chart is like mine, the red candles that you are seeing here, they are my bullish candles. The red candles here are my, sorry, the red candles here are my bearish candles. While the green candles here, they are my bullish candles. Hope is clear. If your chart is like mine, some people, their own chart is black and white. Their own chart is black and white. So for the ones that their chart is black and white, the black I think is the bearish candles, the white is the bullish candles. Mine is red and green. So the red are bearish candles, the greens are bullish candles. Okay, so that is for that. So like I said, number one, what are the conditions for a valid star pattern? Number one, your first candle must be a bearish candle. That means in my own chart, it must be a red candle. Red candle. What's the second one? The second one, my second condition, that is the second candle can either be bullish or bearish. Either of them is fine. Let me let me scroll. Okay. Okay, can either be bullish or bearish, but these are the conditions that you should note, but should be a doji or a pin bar. I believe we know pin bar here, even though you don't know doji, but you know pin bar. Okay, I will show you doji in the chat. Don't worry, I'm here for you. Okay, so should the second candle can either be bullish or bearish, but it should be a doji or a pin bar. That is your second criteria. That is second criteria. Why the third one, the third condition, the last candle, that is the third candle, must, is a must. There is no two ways about this one. Must be a bullish candle. Why? Because this is a bullish star pattern. You get, this is a bullish star pattern. So bearish candle. So I hope this is clear enough. If it's not clear, please you can ask me questions in the comment section. No, I want everybody to be carried along. Okay, I want everybody to be carried along. So I'm explaining the bullish star pattern, and like I said before, all patterns have their bullish form and their bearish form. Now, the bullish star pattern, the first candle, first of all, there are three candlesticks that are formed together. The first one must be a bearish candle. Second must be either a bullish or a bearish candle, but should be a doji or a pin bar. While the last candle must be a bullish candle. So these are my conditions for a bullish star pattern, for me to trade a bullish star pattern. And you will note that it is double valid if it appears at a support. We know what a support is. Appears at a support. Okay, so I believe this is clear enough. So let's go through the chart to check. Okay, now, oh, sorry, I didn't really complete this. Okay, the last thing is, if all these conditions have been met, what you will do is to place a buy order. You know, in forex trading, my red candles are bearish candles. They are not bullish candles. My red candles are bearish. You place a buy order if these conditions are met. That is to say that if the conditions are not complete, that means these four conditions are not there, please don't trade it. One thing you will understand is that forex market is not a rush. You are not in a hurry, okay, to make money, you get. So you should take it easy, okay. So if these conditions are not met, what you should do is to look away. When I say look away, I mean look away. You must not trade for that day, okay. So I'm trying to see some examples here so that we'll see how valid, because I have to show you how valid this pattern is. It's not about blabbing. Okay, let me go to a higher time frame and see this, because I'm not seeing good examples here. I can actually go to another chart to see this. Okay, if I'm not seeing this, let me go to another chart. Mm, okay, I've seen one here. Okay, I've seen an example here. Let me expand my chart so that everybody can see it too. Okay, now this was a support that was from November 24. That is November 2024. So when market got here November 24, it played around and went up. Now coming to December 2024, that is like a month later, a bullish star pattern was formed here. Let me see expand this chart. I don't know how visible it is for us to see, but it's really very wide in my screen though. You can actually put your phone on landscape mode. If you put your phone on landscape mode, it will actually become bolder for you. Okay, now this first candlestick you are seeing here is a bearish candle. That is the red candle is a bearish candle. Now look at my middle candle. This is a pin bar. Like I said, it can either be bullish or bearish. And the last candle that was given is a bullish candle. That is my green candle, and you see that market just started going up from here. Immediately this chart was formed here, December 2024, market rallied up till let's say no, this February 2025. That is for a couple of months. That is 2 months or thereabout. It still went up and went as high as this point in April 2025. Hope you are seeing this. This is a very good market. A bullish star pattern was formed as a support, and market took off and started going up. Now, like I said before, when you see a bullish star pattern, what you do is to place a buy order. When this like the conditions, I listed 3 conditions there. When you see those conditions out there, what you do is to place a buy order. The conditions are met. If the conditions are halfly met, like you saw two, you not see the remaining two, please don't trade it. Okay, it's not star pattern you are trading. You can call it something else, but it's not what I taught you that you are trading. Okay, let me put it that way. So the 4 conditions must be met. First candle must be a bearish candle. Second candle must be can be either bullish or bearish, but it should be a doji or a pin bar. While the last candle must be a bullish candle, and these three must be formed at a what? At a support, and you are good to go. It's as simple as that. You are good to go. Okay, so that is for bullish star pattern. I believe this is clear enough for the bullish star pattern. So the next thing we'll see, like I said before, that every candlestick have the bullish and the bearish pattern. Every pair, every strategy that you want to talk about, they all have the bullish and the bearish pattern. So let's look at the bearish star pattern. Let's look at the bearish star pattern. So we have bearish star pattern. So my first condition, the let's this thing is simple. The bearish is opposite of the bullish. It's just like where's an opposite. So my first candle must be a bullish candle in this case. Must be a bullish candle. Simple. Second one, the same condition. Second candle can either be bullish or bearish, but should be a doji or a pimba. Chikina, gaskia. What's the other word? And the last one, the third one, the last candle must be a bearish candle. Then lastly, it should appear at a resistance. Hope it's clear enough. It should appear at a resistance. This is our, oh, where are my guys? This is how a bearish star pattern should be. It should appear at a resistance. Okay, so let us just go. Since we now, I believe we now have understanding of what the star pattern is. So let's go to the chart and look for which time frame can we use to enter trade. Okay, I'm coming. I will take your question. Let me just do this example first before we go to that question. So let's look for a bearish star pattern. Let's look for a bearish star pattern and see what happened after then. Okay, I've seen one. I saw one just now. Okay, I've seen it. All right, we have, this was, market came here. This was 25th of August last year. No, 7th of August, sorry. I think, okay, 7th of August, that was last week Thursday, yeah. So market came here 7th of August. And then the next day, 8th of August, that would be on Friday, it gave this beautiful bearish star pattern. So we saw the bullish star pattern first. Then we saw the bearish star pattern. Sorry, oh God. The bullish candlestick first was formed. Then this is a very fine doji. Like I said, it can either be bullish or bearish, but it should be a pin bar or a doji. Now this is a doji. Dojis are those candlesticks that look like cross or plus sign. Let me show you another example for people that don't know doji. But I know that pin bar is very popular. So this is a doji. You can see that it's looking like a plus sign. This is a doji. This is a doji too, looking like a plus sign too. This is a doji. This is a doji. Okay, so so the next candlestick that was formed was a doji, and the last candlestick that was formed was is a bearish candle. And what happened after this market was formed? You see that this bearish star pattern was formed, so that the market just fell really well. So when these conditions are met for the bearish star pattern, what you do is to place a sell order. It's as simple as that. The thing is that trading is so simple that it takes you to confuse yourself. That's what I've noticed, that a lot of persons think that trading is about acquiring all the knowledge there is. You read 10 books, you follow 100 people, you learn 1 million strategy. No, one thing I've noticed in trade, like I said before, every strategy works. So you just take one. You don't have to take everything. Take one, take two, and you are good to go. If you can repeatedly do that one, like repeatedly use it to trade, you will be profitable. I bet you. I'm not saying it to wow you or to casual you, or I don't know, but This is what I've seen work. For people that have known me for years, I don't complicate my trading. Trading is simple. I don't complicate it, please. I'll see some people chat, you will see one template, you will see lines, you will see this. So I say, waiting dey happen. You see how my chart is clear like this. This is how my chart is. Except I draw trend line or horizontal line, but this is how clean my chart is. This is how I trade. So trading is simple. Now you see that after this bearish star pattern was formed, market came down. Let's see if we can see other examples of a bullish candle, bullish star pattern or a bearish star pattern. I've seen one, but it's not really giving. That's why I don't. Okay, let me just pick it. Okay, I think I can pick this one. Though this was a ranging market. When I made say ranging market, the market was moving between equals highs and low. So let's see. Let me draw. Use my rectangle to map it out so that it becomes clearer for us. A ranging market. Yeah. Here we are. So this is a ranging market. Market moving between equal highs and lows. Hope it's clear. Um, this one I've put this. I hope we can still see um our bearish star pattern vividly because okay, I just wanted to show you a ranging market. This is how a ranging market looks like. Market comes down, goes up, comes down, goes up, and I can actually trade this and make money. This is another time frame. Can use this to scalp. Okay, so let me remove it so that I will pick out what I wanted to pick out from it. Hope we are getting what I'm saying now. It's just one person that have been answering question on this one. Okay, so this is a bearish star pattern that was formed here. Let me expand this further. So you see a resistance here. You see the bullish candle that was formed first. The next thing was a doji, a bullish doji, and the next thing was a bearish candle. And you see the market just dropped, like market dropped very well. So if I enter a trade here and I exited here, this is cool profit. Let me measure this and see. From here to the support, this has gone. Let me take the tool again. Let me use this. So from this point, I measure downwards and I have this is a whopping 90 pips in profit. This sorry, let's just say 80 pips. Look at this 88.2 here, whopping 80 pips in profit. You get 80 pips in profit if you are using a standard lot size, that is $800. If you are using 0.1 lot size, that is $80. You see what happened when this star pattern was formed. And like I said before, trading is simple. You need you to confuse yourself. You get. Now let's continue. Let me look for other patterns. I'm going to be teaching on that pattern, but I just want to solidify our view on this pattern I'm teaching you. Let me look for, if I'm not seeing anyone, let me go to another chart. This is how trading is. A lot of persons make the mistake of trying to force what they want to see on the chart, and that will not work for you. That will not work for you. Okay, so look for what the chart is showing you and trade in line with it. Don't tell the chart what the chart will do for you. Not you go tell the market go do. You understand? Okay. All right. So I'm not really seeing another this thing, another example. Um, I can't really find. I believe this is clear enough. Please let me get your responses. I'm here for you. I believe, is this a star pattern either bullish or bearish? Is it clear enough? Is it clear enough? I'm seeing one that was formed outside the trend. Is it clear enough? Please let me get your responses. This is another one. This is a bullish star pattern too. Bearish candle, a bullish pin bar, a pin bar, bullish candle. Market went up. It came again. This is under the next chart pattern I actually want to teach you all. It gave this one double confirmation and market just went up. Okay? Okay. There are no questions since now which time frame can we enter a trade? Now, it depends on you. It depends on your trading capital and what have you. For me, I use 1 hour. I don't go below 1 hour to enter my trade. I analyze with 4 hours, I analyze with daily, but I don't go below 1 hour. I don't enter trade with 15 minutes this thing. I don't even enter with 30 minutes. Okay, so that to some extent trading is a personal risk. There are some persons that enter with 5 minutes, it's fine for them. Some persons enter with 10, but me I enter with 1 hour. But the beautiful thing about trading is that any strategy works for every time frame. A bearish star pattern, if it's all the conditions are complete, like I mentioned, the 4 conditions that I mentioned for you are complete, even though it's in a 15 minutes time frame, it will still work. If it is in a 5 minutes time frame, it will work. If it is 1 hour, it is still okay. You get? So all these time frames, all the strategies works for all the time frame. So you just choose what is good for you and use to enter. Like I said, for me, I use 1 hour to enter my trade. I do my analysis from daily, weekly, 4 hours. Then I use 1 hour to enter my trade. Okay, so let's look at the next candlestick. Oh, Peter, hope we are good. You get the drift, right? I believe you are still here because you have answered that question a long time ago. Okay, so all right. Let's look at the next candlestick that I will be teaching, and it's called, let me use this, the engulfing bar pattern. You can say engulfing, you can say engulfing bar pattern. Yeah, good. Provided it's not in the name, provided you understand what you are doing, is fine. So the engulfing bar pattern is made up of two candlesticks, two two candles, and like I said, everything has the bullish and the bearish. So you have your, let's start with the bullish engulfing bar. Number one, the first candle is must must be a bearish candle, must be a bearish candle, while the second one must, the second candle must be a bullish candle. And your third condition is that should, it must, not it must, be formed at a support. These are your conditions for trading the engulfing bar pattern. So if you don't see this condition, don't trade. It's just simple, but as simple as this thing is, some people will still blow account. Sorry. Okay. So the first candle must be a bullish candle. The second one must be a bearish candle. It must be formed at a support. So let's take the drawing for that. How does this engulfing looks like? So you have the first candle that is this relatively small candle. When I say relatively small candle, that means when you compare it with the second one, the small one is bigger. The second one is bigger, sorry. So this is what it looks like. The second candle that totally covers the first. This is your engulfing. Chikina. That's here. So this is what an engulfing looks like. The first candle is small candle. I think I should even add that. Sorry. Let me just add it as number 4. The I know why I'm doing this like this, so because some persons we think that they understand it, but they don't understand. That's why I'm breaking it like this. The first can must be smaller than the second candle. Okay, there we have it. So this is what it is. So you have this first candle here, a small candle. Since we are dealing with a bullish engulfing, so this first candle must be a bearish candle. This second candle must be a bullish candle. This is what engulfing looks like. The second candle totally covers, totally. When I say totally, I mean totally. Totally covers the first one. This is an engulfing bar pattern. So let's go to our chart and look for some examples. Okay, so when you see an engulfing bar pattern, that is the bullish engulfing bar pattern, what you should do is to place a buy order. Simple. Not no more, no less. What you do is to what? Place a buy order. That is all you should do when you see this. You buy. So let's look for this engulfing is so it's an engulfing pattern, sha, but it's so big. Honestly, if I was the one that saw the trade, I have a very high probability of not taking the trade, though there is an engulfing bar pattern that was formed there. So let me expand my chart so that you can see it. It was actually formed at a support. That's why I'm picking it out. Okay. So you see this candle, there is a bearish candle here. See the second candle is a bullish candle that totally covers the first one. And we saw that market started going up from here. Let me zoom out so that you can see it clearly. You see how far the market went. I will measure this too. This is a huge, let me measure this. Now from this place, this is where I'm starting my measurement from. From where it is from, upwards. This did 70 pips. That is like $70 if you are using um 0.1 lot size and $700 if you are using a standard lot size. So you see that these things that are simple like this, they are very powerful. That will make you profitable if you don't overlook it. Because some persons, when it's simple like this is not how it's supposed to be simple. My dear, this is how it's supposed to be simple. If it's difficult, it's not worth it to me. Oh, maybe it's because of my years of experience, but if it's difficult, no, no, no. So this is another bullish engulfing bar pattern that I've spotted here. Let me expand it. So we see this first candle that is a bearish candle. We see the second one that totally covers the first, and the market just went up. Let me measure this now. From here, it is from this place and going upwards. This is still 70 pips or 71 pips. This is cool. You see how it's giving money, though it's simple. The power is in the simplicity. So let's look at the reverse pattern. Like I said, if you have any question, please answer. I've answered these ones that I'm seeing here. So you can just drop your questions. Okay. So for the bearish engulfing. Okay. The first candle, like I say, is opposite, just like west and opposite. West and opposite must be a bullish candle. Sorry, I'm very. I love. I don't. I don't like typos, so I will have to correct. It must be a bullish candle. The second must be a bearish candle. Why? Because it is bearish engulfing bar pattern, so it's coming down. There must be formed at a resistance. Oh, I didn't number it. Sorry. Let me number that. Sorry. Well, these are your conditions. So formed at a resistance. Right? Four. The same thing. The first candle must be smaller than the second candle. So there you have your bearish engulfing. Here you have your bearish engulfing. So the conditions are opposite. So for a bearish engulfing, your first candle must be a bullish candle. Your second candle must be a bearish candle. It must. These are must. Oh. If you are seeing something else, please, I beg. This is not what you are seeing. It must be formed at a resistance, and the first candle must be smaller than the second candle. This is what it is. No more, no less. No more, no less. Okay. So let's go to the chart to see some examples of the bearish engulfing. Um, Normally, if I'm having these classes, I don't mark my charts. I'm waiting. I just want us to look for the stuffs together. We are looking for what? A bearish engulfing bar pattern. This is how you do analysis. So you scroll and you are searching. It's like going to dig for gold. And when you find the gold, it's a precious jewel. I think this thing went back. Let me look at another pair. Let's see another pair. And these patterns I'm teaching you, they work for all pairs, they work for all markets, they work for forex, for crypto, for stocks. It's the same chart, it's the same candlestick. You get. So you can, if you are not trading forex, it's crypto, you are trading futures, it is still valid. It is still valid. Just that to some extent, um, crypto trading is more susceptible to fundamentals, but it is still the same thing. Okay, I found a bearish engulfing. Yeah, so this is it. This is your first candle. Let me expand my chart. This is your first candle. That is a bullish candle. Your second candle is a bearish candle, and you saw that market just fell like a dead man. So you see, okay, let me just measure this first drop and see. Let's measure the first drop. So after this candlestick was formed, how many pips did the market give? The market came all the way down, but I don't want to measure it. So this is a whopping 165 pips. So someone that uses a thousand a standard lot size to trade, this is $1,650. So this is even the first this thing. You see that it continued coming down after I gave that bearish engulfing. The market still came down, but I don't want to even measure to this extent. So let's just leave out. You see what happened. Let's just leave our measurement there. I don't want to measure to this extent. You see that these things are simple, but I don't know. I don't know why people just feel like this is simple. It's not working. No, the simpler the better. So this is under bearish engulfing. Let me expand my chart. Please, if you have questions, be dropping them in the group, in the comment section. Yeah. Okay, so this is another bearish engulfing bar pattern. Yeah. You have the first one, you have the second one, and market came falling well. I don't want to measure this though. Look at how the market fell. You see? So please and please, these things may look very simple, but the simplicity is the profit is in the simplicity. You don't want to make things simple for yourself, you just keep eating losses. You want to learn this, you want to learn that, you want to learn everything. You just keep making losses. Forex trading is simple. Please don't let anyone confuse you. Like I started with knowing your personality. You know your personality, you know what to trade, that is your strategy. Please and please, you are good to go. Okay. So we are looking at the profitable traders toolkit, and we started with know who you are. I've talked about know what you are trading. And the next one we'll talk about is to know when. Know when you are trading. This is the last thing we'll talk about this evening before we wrap it up. Know when you are trading. This is very just important. Does it mean that when I just wake up in the morning, I'll just see market going up like this and I'll enter my trade? No, that's not how to trade. You have to know when to trade. That means if you are knowing when to trade, you should know when you are not to trade. That one is very, very vital. Know when you are not to trade. Very vital. Now, you don't just trade because, for instance, the market will close by 10 p.m. So market opens by Sunday 10 p.m. So since it's Sunday 10 p.m., you just open your chart and start trading. No, it's a no for you. It's a no for you. That's not how to be profitable with trading. So this one is somewhat linked to the first one, which is to know who you are. Know when you are trading. If you are a risk appetite guy, you are trading when there is fundamentals. It's not a must, but I've seen that it works. Okay, why? Because the market has high volatility that period. So you can trade then. That is a good time to trade. So if you are the low risk appetite guy, you don't trade during fundamentals. It will just wound you. Okay, not that it will wound you, your heart fit enter your mouth or your hand, you understand? So know when to trade as a forex trader. Okay, as a forex trader, when should I not trade? Don't trade when you are certain. Don't trade when you are certain about a strategy. Do not trade when you are certain about a strategy. So like I explained, bullish star pattern, bearish star pattern, bullish engulfing, bearish engulfing. We have seen those four strategies now. Now, if you are not sure that this is what you are seeing, please don't trade. Leave it. The market is still here. If you are second guessing yourself, like, am I sure this is a star pattern? It is looking like a star pattern. Are you? Please leave it. Don't trade it. So you have to know when. Know when you are trading. If you are second guessing yourself, that is not the right time to trade. Now, does it mean that if I'm not second guessing myself, I'll get it right every time? No. No business have 100% win rate. I can tell you for free. There is no business, whether manufacturing, production, oil and gas, even entertainment. There is no, go and ask anybody that is successful. There are sometimes they lose. They'll make an investment and everything comes going down. You know, people that is even into import and export. So sometimes they will import goods will sink inside the sea. So forex trading is still like that too. It's everywhere. So the fact that you are not second guessing yourself does not mean that you'll be right every time. But with what we have, if you follow your strategy well, like if you just even work with these four strategies I've taught you, you will be right 90% of the time. I tell you for free. I'm not joking. Those that are trading with me, that are in my room, like my private room, they know. We are not always right, but most of the time we are right. We make money. So know when you are to trade, know when you are not to trade. If you are second guessing yourself, that is not the right time to trade. Please leave. Just close your chat, go and do something else. Now, if you are emotionally high, like you are sad. Sometimes if you are too happy, safe, that is not when to trade. If you are emotionally high, you are angry, you are sad, you are happy, you are in high spirits, that is not when to trade. You just say, omo, this thing dey go up oh. Omo, this thing dey go up oh. You just okay, make I just enter. As you just enter, it's well with your soul, my brother. So if you are emotionally tense or emotionally high, don't trade. You are angry, you are sad, you are happy, don't trade. You should only trade when you are mentally stable. And when I say mentally stable, I'm not talking about sanity here. Like you are cool, calm, and collected. Not that you are not. You understand. So know when you should trade. Another thing about knowing when you should trade is that if you're under pressure, don't trade. You want to pay school fees, no wahala. You want to pay rent, fine. You want to get married, your marriage is tomorrow, and you don't have money today. Please don't trade though. Oh, my laughing. Sounds funny, right? Okay, so you should know when to trade, know when you're not to trade. If you're under pressure, like financial pressure, please, it's not advisable to trade. Don't. Because you make all decisions through those periods. The thing is that you will not be the one thinking for yourself. It is the pressure that will be thinking for you. You think you are normal until you hit stop loss. You know that you are not normal. Okay, it's funny, Sha, but I'm just telling you, know when you are trading, please. It's not every time you should be trading. One of my mentors, he trades, is he 4 times in a month? A bit too. Okay, let me put it this way. It does not it does not take more than 4 trades in a month. Like in a whole 4 weeks of trading, it doesn't trade more than 4 times. You see, that and it makes so much money because it can enter a trade today and leave it to run for the whole week. Some of us we are very itchy. Like you just wake up in the morning, you open your chart. Wetin we dey trade today? Wetin we dey trade today? My friend, calm down, calm down. The market is not running. Okay. So know when to trade. If you're under pressure, don't trade. If you're emotionally high, don't trade. If you're second guessing yourself, you are not sure of what you want to trade. That is the strategy. Don't trade. Okay. I know I mentioned something, but it just slip off my brain. But I hope we get the gist, okay? So if you have any question, you can drop it in the comment section. Let's take it. Until then, this will be the end of today's class. I hope we have another time. We will have another time to learn too, because like I said, I plan to be doing this thing monthly. Okay, so the next month for a webinar like this, so forex training webinar, I plan to be doing it every month. So till next month. And good news is that next week on the 21st, on our Twitter spaces, for those of us that follows me on Twitter, you know that we do have Twitter spaces weekly. Okay, so next week I'll be having a guest. He's one of my bosses in the forest market. On Monday, the flyer will be out, so get set. I'll be looking at the successful traders roadmap. Okay, so next week we'll be having a guest on Foreign Lab. That is on Twitter. This will be on Twitter, not on YouTube. So get set and get prepared. Okay, I'm still Abamba Sarah. I'm looking at my comment section. There's no question. No. It's okay. So I am still Abamba Sarah. The founder of Switch Digital as a digital skill training company. So you can reach out to me if you want to learn any digital skill. But me, I'm focused on forex trading. That is my specialty. Okay, until then, see you when we see. Have a lovely night's rest. Goodbye. Wow, wow.